So let's talk about the economic reports that caused the NASDAQ market or overall markets to gap up 1 hour before the market opened. For those that are unaware, again, this is overall NASDAQ, which is the 1-for-1 NASDAQ ETF. It gapped up about 1% during this pre-market session, about 1 hour before the market opened. And it was because a series of economic reports were released. The first one that I want to talk about is, again, going on over to techbutsolutions.com. We provide it for you for free under trading tools. It's a real-time economic calendar. And you guys can see that the main focus for this that was released 1 hour before the market opens is we had non-farm payrolls being released coming in much lower than what was expected. But the big one is the unemployment rate. Unemployment rate came in at 3.9% versus the expectation of 3.8%. I'm going to answer that in just in just a little bit of why does higher inflation cause the market to go up. Give me a second. But the other report that was also released, this was 30 minutes after the market opened. So this one was actually released during our live trading session, was the ISM non-manufacturing PMI came in at 49.4% versus 52%. That actually caused the market. That was the turning point where the market actually began to kind of like pull on back. So let me answer that first question. Why does the market push up when unemployment is higher? This doesn't always happen, right? But as of right now, the Federal Reserve is trying to slow down the economy. So for those that are unaware, again, the Federal Reserve all of last year, 2023, were raising interest rates because inflation was really high. And the way to moderate inflation is that you raise interest rates, you make it more expensive for people to borrow money. By making it more expensive to borrow money, you therefore encourage people to spend less money because it's more expensive for them, right? So you therefore slow down the economy. Well, the issue was that inflation, as it was going down, unemployment wasn't going down. Unemployment, or unemployment wasn't going up. It was actually going down, which was a pretty wild thing, right? So the idea of inflation or unemployment actually going up is supporting the case that the economy is slowing down. And when the economy is slowing down, then that justifies that the Federal Reserve doesn't have to raise interest rates anymore. And possibly it can justify cutting interest rates. So that economic data of the unemployment rate going up actually supports the case that the Federal Reserve can probably lower interest rate or cut interest rates sooner than later. And that is why the market is pushing up, not because unemployment went up, but it's the domino effect that it has and the influence that it has to support the Federal Reserve in making a better decision to then cut interest rates. So I just wanted to make sure that that was understood. Now, going back to the overall market's trading sideways. I don't know about you, but this just pisses me off. There's no clear direction. We're not showing signs of progress on the upside. We're not showing progress on the downside. Please, and I'm gonna cut the video here. Do not enter a trade that you're gonna end up regretting. Forcing a trade today when direction is unclear is one of the biggest mistakes beginners make. So if there's no clear direction, no clear opportunity, why even take it? You're going to end up bag holding a position today that you're going to open up on Monday, and then it could ruin your entire week because you could open up red on Monday, and then now you're just bag holding it until hopefully it goes according to plan. And guess what? Not only does that mean that you lost money today and possibly on Monday, but you're also missing out on all future opportunity as well because all of your money is stuck in one stock that you're bag holding. Do not just think about, oh, well, okay, I could just potentially lose money. No, you also need to think about the time that you're going to waste and the missed opportunities that you're going to have by forcing a trade and end up bag holding. So please make sure, again, going into this weekend, you do yourself a favor. And if something does meet your criteria or direction becomes more clear, sure, don't be afraid to take advantage of that opportunity. But if direction's not clear and there's no clear opportunity, why force it? So again, I do trade live every single morning, and we talked about that very concept within today's live trading session. There's mornings where right at market open, I take a series of trades. But then there's mornings like today where markets are trading sideways, and my job is to try to lead by example and to remind our traders that not every day is a day worth trading. And if you are someone that learns best by watching other people do, just like me, again, I really think that you would benefit from our live trading sessions that we host every single day right at market open. It's for our LPP team. It's the second link in the description down below. So whenever it is that you feel that you are ready, again, it's a one-time payment, lifetime access. And right now it's 50% off. You get to see all of my good trades, all of my bad trades. And yes, it's designed for complete beginners. If you have any questions, comment down below. But if you're ready to join, it's the second link in the description down below if you want to sign up right now for 50% off. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.